For decades, you have been told a very simple story. Go to work, put 10% of your paycheck into your 401k, and eventually, you will retire as a millionaire and spend your golden years sitting on a beach. But that story is a lie. In the 1980s, massive corporations quietly changed the rules of retirement. They did it to save themselves billions of dollars, and they passed all the risk directly onto you. Today, Wall Street is quietly draining your retirement accounts through hidden fees, while inflation destroys whatever is left. Here is how the 401k trap was built, how Wall Street is stealing your wealth, and why the million-dollar retirement is mathematically dead. To understand the trap you are in today, you have to look at how your grandparents retired. 50 years ago, most workers had something called a pension. The math was very simple. You work for a company for 30 years. When you retire, the company guarantees they will pay you a set amount of money every single month until the day you die. With a pension, the company took all the risk. If the stock market crashed, the company still had to pay you. If you lived to be 100 years old, the company still had to pay you. But in the 1980s, corporate executives realized something. Pensions were incredibly expensive. They were draining corporate profits. So, Wall Street and corporate America came up with a brilliant plan. What if they could kill the pension and force the workers to fund their own retirements? What if they could take all the risk of the stock market and dump it entirely onto the shoulders of the middle class? That plan became known as the 401k. Here's the crazy truth about the 401k. It was never meant to be a retirement plan for the masses. It was actually a tiny, accidental tax loophole created in 1978 for rich executives to hide some of their bonuses from the IRS. But corporations realized they could use this loophole to replace pensions entirely. Instead of guaranteeing you money when you retire, the company just says, "Hey, you can put a piece of your paycheck into this 401k account. We might match a tiny bit of it. Good luck." Overnight, the American worker was forced to become a professional investor. Think about how insane this is. Plumbers, teachers, and nurses, people who have no background in finance, were suddenly told that their ability to survive old age depended on them guessing the stock market correctly. If the market crashes the year you want to retire, you lose. Wall Street turned the American retirement system into a casino and forced everyone to play. But it gets worse. Because most people don't know how to pick stocks, Wall Street created mutual funds and target date funds to manage the money for you. And for doing this, they charge you a management fee. Usually it looks like a tiny number, 1%. You look at your statement and think, 1%? That's nothing. They can keep 1%. This is the greatest mathematical trick Wall Street has ever pulled. It is called the 1% fee illusion. Because of the power of compound interest, that 1% fee is not taken once. It is taken every single year, off the total balance for the rest of your life. Let's do the math. If you invest over a 30-year career, a 1% annual fee doesn't eat 1% of your wealth. Over time, it eats nearly 30% of your total lifetime returns. You took 100% of the risk. You put in 100% of the capital. But Wall Street took 30% of your final wealth simply for holding your money. They are quietly siphoning millions of dollars out of the middle class, and you don't even see it happening because it is automatically deducted from your account. So, you pay the fees, you take the risk, and let's say you finally hit the magic number, $1 million. For decades, financial advisors told us that $1 million was the finish line. But there is a silent killer destroying that dream: inflation. Because the government keeps printing money, the value of the dollar keeps dropping. $1 million today does not buy what it bought in the 1990s. If you retire with $1 million, the standard financial rule says you can only safely withdraw 4% a year so you don't run out of money. 4% of $1 million is $40,000 a year. Can you live on $40,000 a year today? What about in 10 years when rent and groceries have doubled again? The math is broken. $1 million is no longer a wealthy retirement. It is barely enough to survive. And millions of Americans are waking up in their 60s realizing they will never be able to stop working. The system shifted the risk to you and stacked the deck in favor of the banks. But you can still win if you know the real rules of the game. Here is exactly how you protect your retirement. Number 1. Take the free money, then get out. If your employer offers a 401k match, meaning they put in free money when you do, take it. That is a guaranteed 100% return. But once you hit the match limit, stop putting money in the 401k where your choices are limited. Number 2. Stop paying Wall Street for nothing. Look at your 401k or IRA statements right now. If you are in a target date fund or an actively managed mutual fund, you are likely paying massive fees. Switch your investments to low-cost S&P 500 index funds. The fees drop from 1% to almost zero, which keeps hundreds of thousands of dollars in your pocket over your lifetime. Number 3. Build assets you actually control. The 401k traps your money until you are nearly 60 years old. If you want true freedom, you need cash-flowing assets today. Real estate, starting a business, or building digital income. Do not rely entirely on a government tax loophole and the casino of the stock market to save you. They took away the safety net and told you the 401k was a better deal. It was a better deal, but only for them. It is up to you to secure your own future. I want to ask you a serious question. Looking at the economy today, what age do you actually think you will be able to stop working? Drop your realistic retirement age in the comments below. Let's see what the reality is for normal people. If this video opened your eyes to how the system actually works, hit the subscribe button. We break down the real rules of money every single week. Take control of your wealth, and I'll see you in the next one.